Yeah, welcome to another edition of the Islamic Finance Weekly, where we bring you key updates on development in the non-interest finance market. This edition will bring you excerpt from a webinar hosted by IFN Nigeria on Hair Forum 2020 in collaboration with the Nigerian Stock Exchange, which explored opportunities for Islamic finance, banking and investment to flourish in Nigeria. It featured experts and representatives of non-interest finance multilateral institutions. Ahsan Ali, Head of Islamic Origination Standard Chartered Bank, gave an overview of recent developments in the international Islamic finance and Sukuk markets, especially considering COVID-19, and if Islamic finance in Nigeria can use this opportunity to become truly responsible in Africa and contribute to the region's growth.
Islamic finance is integrated with the global conventional financial industry, so it's not immune to the shocks in the system. And what we saw is that both on the banking side as well as on the capital markets or Sukuk side, the pandemic did have an effect. So specifically on the banking side, we saw the moratoriums and the restructurings, etc., announced by the central banks, and then the help and support extended by the governments to, especially to the SME sector and to the individuals. So all did flow through the banking as well, and we are seeing, the effects on the bank's balance sheets in terms of the NPLs or in terms of the other things. If you see globally, the Islamic banking sector, I'm talking about specifically. So it is in line with what the conventional banking sector has experienced globally.
It gave insight on how the pandemic has affected the Islamic finance industry, especially in relation to the Sukuk market.
In terms of the Sukuk market specifically, so while we had a good beginning to start of the year in January and February, but come March, and because there was an effect on the global capital markets, and because the liquidity situation, etc., there was a halt or pause, I would say, for 3 odd months from March to May in the global Sukuk activity.
Boubakari, Head of Sub-Saharan African Unit ICD of the Islamic Development Bank Group, in his intervention provided a realistic assessment of Islamic finance in West Africa, particularly for Nigeria.
What I can say is in Sub-Saharan Africa nowadays, there is a market for Islamic finance, but the potential is not used even at 1%. So as you know, almost 41% of the African population are Muslim, and Islamic finance for Muslims is a must, while for others is optional. But the ethical nature of Islamic finance is nowadays attracting more and more non-Muslim customers. We as ICD, we own banks in Sub-Saharan Africa, and I was surprised to notice that one of the banks has as their largest customer the Catholic Church.
Speaking on Nigeria, he said the country is one of the pioneering nations establishing the Islamic finance regulatory framework in the region, while the West African Central Bank just followed 18 months ago and launched their framework on June 2018.
When it comes to Nigeria, Nigeria was one of the pioneers in establishing Islamic finance regulatory framework in the region, whereas the West African Central Bank, the BCAO, has just followed 18 months ago. So they have launched their regulatory framework on Islamic finance on June 2018. But even though Nigeria has a well-established Islamic finance regulatory framework, there is only 2 full-fledged Islamic banks, while 2 or 3 other banks have set up an Islamic window. By mid-2020, out of Naira 37 trillion Nigerian banks' total asset, the non-interest banking accounted for 159 billion, which represent less than 0.5%. So on the stock market, out of the 30 trillion Nigerian debt market, the Sukuk bond size were estimated at Naira 211 billion, which is 0.69% of the total size. So meanwhile, when there is any Sukuk issuance, it is oversubscribed. So meaning that the demand is there. So what is stopping Nigerian industry from requesting more and more Sukuk from the stock market? So this is something that we need to find out and maybe suggest some recommendation.
It believed Nigeria can reposition itself as the capital of Islamic finance as the way Malaysia did in the Asia region.
We believe that Nigeria can position itself as the capital of Islamic finance the way Malaysia did in the Asian region. But this requires a lot of flexibility in the interpretation of Sharia when it comes to acceptability of product. And also it requires a lot of harmonization of regulatory framework within the region. There have been discussion ongoing on whether to launch the same currency for West African countries. So we believe very soon central banks will start cooperating with regard to launching the currency and so on. So there is no reason the same cooperation is not established when it comes to Islamic finance regulatory framework. So the challenges we are having as MDBs dealing with several countries is when we come in a region, for example, I can go to Cote d'Ivoire to extend facilities. I find out that the Islamic finance interpretation is different from the one we have in Nigeria. So it becomes a kind of double work, when it comes to legal agreement, interpretation, structuring the product, and so on. So it will make our life easier and also other financiers if we know that the same Islamic finance rules applied in Cote d'Ivoire is the same that I will be finding also in Nigeria.
The director DDCAP DIFC Limited, Mr. Cassim Docrat, explored the role of multilateral institutions and financial institutions in general, both in Islamic and conventional, to advance Islamic banking and finance in Nigeria, and role of Fintech in the Islamic finance space. Speaking of the multilateral institution, Mr. Cassim Docrat said on the IDB's website, Nigeria comes out on the 4th in terms of capital provided to the Islamic Development Bank. In terms of disbursement, $6.9 billion, while funding is $1.5 billion.
When I was researching the subject, I was pleasant to unpleasantly surprised when I looked at IDB's website, because I'm not sure if many people know, but Nigeria comes out as 4th in terms of capital provided to the Islamic Development Bank. That's number 4. But in terms of disbursements, I just want to give some comparisons just to give you an idea of what's going on. So capital is 3.9 billion, funding 1.5 billion. Let's take Turkey. Turkey's capital is 3.3 billion. The advances to Turkey is 12 billion. Bangladesh, $500 million is capital, advances there 21.8 billion. Pakistan, 1.3 billion capital, advances there 13.2 billion. So in a sense, I don't want to say IDB or not, or Nigeria, but I think this is an underutilized multilateral organization when Nigeria is one of the founder members. And I always argue that IDB provides a pool of capital. The structure, because it's Islamic, might be slightly different, but the credit issues are exactly the same as you would get from any multilateral lender anywhere in the world.
According to him, less than 30% of advances from Islamic Development Bank are made to African countries.
Now, what does it do, multilateral organizations, for Islamic finance in terms of a country like Nigeria? First of all, you are tapping into, as I said, the liquidity pool. Second, it's credit enhancement. You are providing credit enhancement when you join hands with IDB. Why? Because I work and live in the UAE, but I've worked in Saudi and in Kuwait. In both these spaces, they have very well-developed Islamic banks, private sector banks. The moment you mention IDB, they're quite happy to participate in that particular investment proposal. So IDB is a great marketing tool for this region, and indeed even in Malaysia and so on. Once you have the IDB stamp, it helps you a lot. And then the last thing is on the listing side. For example, if you had a Sukuk and IDB involvement, not that this particular one, but Indonesia successfully what you call listed its Sukuk on Nasdaq Dubai. And the reason I'm saying this is this provides the opportunity for information flow from Nigeria into this region. And perhaps if you do a listing in Malaysia, that at least you will get the exposure that is needed to get Islamic finance going much more intensely in Nigeria.
Looking at the developments in fintech, Mr. Cassim Docrat said the first fintech revolution and the most successful payment system started in Kenya and has now spread to 7 countries in Africa.
So then I come to the fintech, what you call aspect of this. I think very few people appreciate the fact that, in my opinion, the first fintech revolution before it was fashionable was M-Pesa, the most successful payment system that started in Kenya and now is in 7 countries in Africa. And of course, there's variations of the theme all over the world now. But the thing is that fintech today, and there are, I think, incubators in Nigeria, I believe, that are doing this in the conventional space. If you had collaboration with, let's say, Islamic institutions here, they might be able to invest in these to create digital platforms to be able to do this for Nigerian banks and so on in order to bridge the divide. What does that do? That also obviates the need to create Islamic branches all over the place. All you need to do is digitize. The other aspect of it is that today, if a Nigerian wants to, or a Emirati resident or an Emirati wants to open an account with a Nigerian bank, typically you will run into different, what you call obstacles. Whereas you could open it with HSBC and so on. So what I'm saying is, in order to bridge that divide, if we upgrade our digital channels, we'll be able to cross-sell in these markets across between Asia, and right now we have it between Asia and UAE, or what you call in terms of the Gulf region, and why not extend this to Africa?
In terms of direct Islamic products, it said DDCAP has a platform and is working with financial institutions in Dubai where retail clients can purchase commodity on the smartphone to be able to complete Murabaha transaction.
So when it comes to recommendation, I will be giving a recommendation in general, not only for Nigeria, but for all the countries, so that we can benefit more. In the banking sector, I believe by establishing a kind of cross-border supervision will help in harmonizing the policies. You know, we harmonize the Sharia governor, we harmonize the Sharia rulings to introduce also the risk-sharing products and services, because it is lacking when it comes to, you know, mitigating risk on the financing. So it becomes challenging sometimes for SMEs to find the best, you know, the risk alleviation mechanism. So on the capital market, we recommend to allow like tax-free transfer of asset, because, you know, Islamic finance is mainly asset-backed or asset-based. And in some countries, the regulatory requirement is, you know, requesting a registration fee when it comes to any transfer of property. So it becomes like kind of double taxation for some product. So we are also suggesting to align the Sharia screening standard for all the jurisdictions, so that, you know, if there is an investor here in Senegal who would like to invest in a Sharia compliant stock in Nigeria, he knows that, you know, the Nigeria Stock Exchange has followed the same screening rules are in other countries, so it can give him a kind of comfort when it comes to a halal or non-halal type of transaction. We also recommend to publish all these Sharia screening standards. We recommend, you know, to scale up, you know, Islamic finance transaction to, you know, in order to include even low-income earners. So I would love to see a farmer in the northern Nigeria who is able to buy a Sukuk in the Nigerian Stock Exchange with the minimum saving that they have. So it's not only the business of rich people, we also have to include these low-income earners. So there is a need to develop, to really develop takaful and re-takaful companies. So because you can have a takaful company being able to, insure or cover any risk, but when it comes to reinsuring, sometimes they have to rely on conventional reinsurance companies. So by, having a kind of synergy, I believe we can develop a more stronger re-takaful company, maybe at the regional level. So we also recommend to kind of share the cost. Like, for example, when you come to Nigeria, the regulation is saying if you need to establish any Islamic financial institution, you need to have your own Sharia board. And these become expensive for small banks. So, but if there is any institution that can provide this service so that banks can outsource, like Sharia board service, for example, it can lower the cost and then it will allow more banks to come into Islamic finance. So there are these details that we are working on. We are suggesting always, keep in touch with the regulator, with the government. And I believe, the future of Islamic finance is bright in the continent. And I will not be satisfied until I see Nigeria becoming the capital of Islamic finance in Sub-Saharan Africa. Otherwise, there is something going wrong.
In addition, Cassim Docrat said Nigeria has amazing value proposition, but need collaboration between Islamic finance institutions in the world, which will strengthen the Islamic finance ecosystem.
I think Nigeria has an amazing value proposition, and I think we need to do a better job of bringing Nigeria out, collaboration with Islamic institutions around the world, especially in Asia and in this part of the world. And I think that type of thing will help within Nigeria to strengthen the Islamic ecosystem.
A major takeaway from the webinar is the need for standardization and harmonization of the non-interest finance market at a cross-border level in Africa and at the global level. The multilateral institutions such as the Islamic Development Bank and others need to allocate a bit more capital to Africa. Also, agency banking and digitization can be leveraged to achieve this, while the takaful needs to expand with an ecosystem for the entire sector in order to make impact. And that will be all for this edition. Visit our website www.crucialng.com for more updates on Islamic finance. Follow us on our social media platform displaying on the screen. Many thanks to all our viewers for watching and following the Islamic Finance Weekly. Please stay safe and see you again next week.